Hello guys, it's Gavin Talent once again, and welcome to today's video. So earlier this week, I made a post on Twitter where I said liquidity sweep before a break of structure to the opposite direction with a fair value gap close to any PDRA or demand and supply level. There's likely going to be an inducement to trap traders. Make sure this aligns with the current market structure and also take note of premium and discount levels. That is an high probability trade setup. The old thing still works. So what do I mean by that post here? Now, I know most of you have actually seen this kind of pattern a lot, where price swept liquidity here. There's an inducement, this internal range liquidity close to the point of interest, a break of structure to the opposite side. Then we target the next side, the external range liquidity. This pattern right here, I know most of you have actually seen it. Now, trading this pattern alone, just by looking at this pattern, can actually burn you out. Now, let's take, for instance, this Ethereum trade. So what happened on Ethereum is actually a typical AMD pattern. If you've not seen this video, this one, go and watch it to understand. It has already flipped bullish by taking out this previous high that gave us the previous low, right? And this was our new high. Price pulled back into discount levels after accumulating for so long. So this pullback was more like a manipulation before the distribution. Now you might now ask yourself, why didn't this high hold? Based on the fact that it's the same kind of pattern I just explained earlier, that I said sweep liquidity, break structure, blah, 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 something like that. Look, the pattern is nice. Sweep liquidity, yeah. Inducements and point of interest around that area. That's sweep liquidity. So why didn't this hold? It's simple. On my tweet, I said, read it again. It must align with the current market structure. This is bullish, so this becomes an external range liquidity when price taps into discount levels. If price was here to tap into discount levels before tapping into this particular point of interest, it would have been a valid point of interest. But price has already tapped into 50% of this particular leg. You can measure with your gun box or Fibonacci. So this becomes what? A trap and a liquidity point for price to take outside this particular range. That was why it did not hold. So after the accumulation, manipulation, and distribution, we need to understand that price is continuing upward. So you want to be looking for such kind of pattern in line with this current market structure. And I was able to spot two, I think. Yeah, I think two of it. Let's go to the lower time frame, like the 30 minutes time frame here. I was able to spot like two. So first, this particular one, price from this low, we have this high, this 30 minutes range, price pulled back into discount levels of this particular range, and give us this nice looking confirmation here to tell us that it wants to continue going upwards, right? Here, we have this nice 30 minutes order block. That has a fair value gap here, and price came down to fill the fair value gap. There was no inducement, so I would have stayed out of this particular trade if price did not engineer this liquidity that it did here. So with this engineer liquidity, this place becomes what? An high probability point of interest for price to trade from. So after price took out the liquidity, sniped into that entry, and boom, where should be our target? This particular high, and that is all. So on the 15 minutes time frame, we have still a continuation setup. We have this other block that swept this previous candle low. So this is what I'm trading with. Then we have this particular pullback here that's going to act as an inducement because a lot of traders want to actually take their trades from this point. So we needed price to do a take out this low, tap into this point of interest and move, which was typically what happened. Our stop loss just below this low here. Then we target what's the next high. We don't need to be greedy to start targeting whatever it is. Just follow the structure, work with the structure as it is. As you can see, just simple as it is. So same thing happened on GBP CAD. Now on GBP CAD, we have this high that gave us this particular low and price did what? Swept this previous low here, then went on to break structure to the opposite direction, just like what I said. Once you see the liquidity sweep and a market structure shift in the opposite direction, right? There's a fair value gap here for price to fill. We have this internal range liquidity acting as an inducement because it is actually close to the point of interest, right? So this low now went on to give us this high. So we need price to come and fill this gap, take out this internal range liquidity, then take out this previous high. It's as simple as it is. That was just the plan. And what did we have here? Stop loss below this particular level, and price did what? Pull back into discount levels, take out this inducement, fill this gap, tap into our point of interest, then went on to do what? take out the external range liquidity. So like I said on my tweet, price move from what? Taking out internal range liquidity to external, just internal range liquidity to external range liquidity. That is what price mostly care about. Yeah. So if your point of interest is close to a liquidity level, good. Now I have this one on USD CHF, this particular trade. Where is it? I think it was on the hourly time frame, yeah. The same pattern, which is this. So what happened on this particular USD CHF is actually simple. I got my entry from this hourly order block that swept this previous low, this liquidity right here. Now there was a momentary shift here. So this was supposed to be a short-term buy to this particular high, right? But there was no inducement. There was a fair value gap here. So price pulled back, engineered liquidity to give us this new high, right? So the goal here is for price to take out this inducement. My point of interest is actually close to this inducement. So as price takes out this inducement, taps into my point of interest, could have been a sniper, and I target this high. Then it's missed. Now the question is, why did this particular entry missed? It's simple. I was actually at the gym when I drafted this particular setup. So I did not place my position too very well. Look, it's still the same entry. You can go to my Telegram channel. I dropped it there. Still the same entry, but I did not put my position too well. Now with this rectangle, I was able to mark out the entire order block as swept liquidity. Now let's zoom in to see my mistake. After marking out the entire order block, look at where I placed my position to, because I was in a hurry. So I actually thought I placed it well, giving us this entry at 0.79185. Could have been what? Just around this rectangle here, which was 0.791 and, sorry, which was 0.79189, and that could have been the entry, sniper. We move. But the mistake was there, and after marking out the entire order block, I placed my entry just below it, which is funny. But as you can see, it's still the same pattern, still the same valid entry and all that. The pattern works like magic. This pattern has been there even before most of your mentors started trading. Train your eyes to see it and watch it play out yourself. Sweep of liquidity, then break of structure or momentum shift to the opposite direction. We have an inducement to an engineer liquidity close to a point of interest. That point of interest becomes when you take your entry. Once the point of interest does not have inducement, you wait for price to engineer liquidity. And don't be greedy, just target the next external range liquidity, and that is all. So price moves to take out the internal range liquidity to external range liquidity. So that is basically it. Now I still drop my entries on my Telegram channel. If you are not there, check the link in the description below. You join my Telegram channel where I drop my trades for free every week, consistently every week. I am always active. As long as I trade, you will definitely see me drop my setup there every single week. We've been doing it consistently for years now. So see you guys on Telegram.